So that's our background. Okay, so the agenda for today is to cover the following. First, we'll discuss what are crypto assets, how many are there, how to analyze crypto assets from a very general perspective, how have crypto assets perform, and then we'll discuss about SupraFin and how you can use SupraFin, the smart investment platform for crypto assets, to invest in crypto assets. And last but not least, we will have Q&A at the end. So there are more than 2,000 crypto assets currently trading in approximately 300 cryptocurrency exchanges globally. So crypto assets such as Bitcoin, you probably are very familiar with Bitcoin, but then we have Ethereum, Ethereum Classic, Bitcoin Gold, Bitcoin Cash, Litecoin, XRP, USDT, PART, BNB, etc., etc. So this is a quick video on crypto assets. So what are crypto assets? Crypto assets are tokens that are stored in public blockchains. And they include exchange tokens, utility tokens, stable tokens, and security tokens. We will discuss the first three tokens in more detail. And just briefly to mention security tokens, there are not a lot of security tokens, and this is why we don't plan to discuss in more detail security tokens, but security tokens in general are tokens that are backed or collateralized by securities such as equity, fixed income, securities, etc. They are complex products. So let's start with defining what exchange tokens are. An exchange token, you can think of an exchange token as a currency of a public payment system. And these exchange tokens are not issued or backed by any central authority, and they are used as means of exchange within a public blockchain and as an economic incentive to maintain that public blockchain. There are hundreds of these exchange tokens. Here are some examples: Bitcoin, Bitcoin Cash, Bitcoin Gold, Ethereum, Ethereum Classic, Dash, etc., etc., etc. An exchange token has its own public blockchain, where public blockchains are peer-to-peer network of computers. And as mentioned, you could think of a public blockchain as a public payment system, and where these public blockchains do not rely on banks. So in essence, these public blockchains are like public payment systems separate from the banking system. And so these exchange tokens are used, you can move these exchange tokens through each of the respective public blockchains. And so that's what makes so unique the exchange tokens. Now, what is a utility token? I'll pass it to Rob to discuss that.
Yeah, so if you could show the slide, thank you. So utility tokens, why Liliana has asked me to talk about this is because mainly I was involved with the Pillar project, which has a utility token. It's not listed here, but there are other utility tokens. There are many in the thousands. This became very popular in around 2017 when a number of projects, hundreds of projects were launched. In 2018 also, where hundreds and hundreds of projects were launched around the world. And it was a way of granting access to a future product or service. So, and tokens were issued and monies were given for those tokens for this promise of a future product. And there are a lot, unfortunately, have fallen by the wayside now. They're not still operating, but there are some still notable ones that are still running. including the Pillar project that I'm still involved with, one is called Chainlink, which is a very interesting project, and their token for utility is used to pay for the nodes, and this is for the infrastructure effectively of issuing these chains and the smart contracts that go onto the chains. And I won't go into the details of that, but what is really important to understand there is the fact that you've got a mechanism to pay for the infrastructure, and they're using this token infrastructure for that. It's like very much like you would imagine you subscribe to a service and you pay for a service, and that money that they receive is used to pay for the infrastructure. So all the subscriptions are used to pay for the infrastructure. A similar one to that, and also very interesting, is a company called Golem. They created a decentralized marketplace for computing power. And I know they were working on projects with medical research and other types of projects where they could rent out your computer and create massive computing power by having thousands of computers all connected together in lots of people's homes through their own internet connections. And then a whole marketplace of token economics for payment going through their token, the GNT token. And then we have a well-known exchange in the cryptocurrency market called Binance. And Binance grew very quickly from Asia into Europe, and then now is a global exchange effectively that allows you to exchange between crypto and crypto. So an example there would be to say, if you have some Bitcoin, you could buy Ethereum. And they have an incentive method of using their token, which is that you can get discounts on using the Binance platform by using this token. So you can buy some tokens, BNB tokens, and then use them for the transactions, and you will get discount. Use that to pay for the transactions, and you'll get discount. And then the final one that we'd like to highlight to try and explain what utility tokens are and how they're used is another one that is very well known, is the Brave browser. The Brave browser is based on something called Chromium, which is Google Chrome infrastructure. It is a derivation of it. It's a browser that allows you to go to websites. So just like if you're on a Microsoft platform, you might use Edge, or if you're on a Macintosh platform, you might use Safari, and you've probably all heard of Google Chrome. Well, many of you may have heard of Brave. Brave is a privacy and secure browser. It protects you and also blocks ads and things like that. They've created a very interesting token economics where you can pay advertisers pay for websites and so on to go onto websites, and you can receive BAT tokens for looking at those adverts. So you can actually be paid, and I have been paid. In all my Brave usage, I've got about $2 now worth of BAT tokens. So you know, the economics and the whole marketplace is slowly building up, but it will take some time to take hold.
Now, stable tokens. So what are stable tokens? The stable tokens' main goal is to create a token that has very low volatility. And to achieve that, stable tokens tend to be collateralized or backed typically by fiat currency or by fiat that is relatively stable. So most of the time, these tokens have as collateral the US dollar. Because of all the currencies that exist, the US dollar has relatively low volatility. But there are other stable tokens, such as DAI, for example, that is collateralized by using other crypto assets. So the collateral really does not matter. What matters for the token is that they have a relatively low volatility, and it doesn't matter how they try to achieve that. Obviously, it's easier to do that, let's say if you are collateralized 100% with the US dollar. rather than using other collateral, which then you need to either overhedge. For example, DAI is overhedged in the sense that, or over collateralized in the sense that per each DAI you might have twice as much as collateral backing it, just because there is some mechanism of hedging rather than a stable currency backing it. But there are many stable tokens being created globally. I mean, you can create a stable token made out of all kinds of baskets of currencies, or other collaterals, and some of them are centralized, and some are decentralized. So DAI, for example, is a decentralized stable token. The majority of them are stored in underlying blockchains such as Bitcoin or Ethereum. Actually, the majority use Ethereum. USDT uses Bitcoin. But again, this is a very particular token, and you can use it for payments globally that are relatively stable. And obviously, we all have heard also of Libra, well, the Facebook stable coin being created, but anyone can create these stable tokens. In my opinion, stable tokens are very much a commodity, but the best stable token will be the ones that has the most reliable collateral that can achieve the lowest volatility or more stability. Not lowest volatility, but actually volatility that is almost zero. So how do you analyze crypto assets? Well, first, you have to understand the type of crypto asset that you are dealing with. We mentioned there are 4 types of crypto assets. So the exchange tokens, the utility tokens, the stable tokens, and the security tokens. Then you need to understand the key drivers of value for each of them. And the values, these key drivers are very different from each type. For example, for exchange tokens rely on public blockchains, and public blockchains are decentralized payment systems, and hence for exchange tokens, the ones with the most value will be the ones that can achieve the most decentralization, with higher security, with higher speed, lower energy consumption, and so on. And yet utility tokens are very different. Utility tokens depend on the industry of each of the companies. And so then there is another layer of complexity added there. And then stable tokens completely different again. The only goal for a stable token is to have low volatility and have a lot of trust that the collateral is not going to go away, and hence you value those in a different way as well. And security tokens, probably the most complex ones, because security tokens rely on other securities, and understanding those securities, has its own complexity. So you need different models for those. Now, once you have your understanding of what are the key drivers of value for each type, you need to have the right data sources for each type of crypto assets. Because if you don't have the right data sources, then obviously garbage in, garbage out. And there are all kinds of data providers now. There's for providers of market data, providers of blockchain data, and providers of other more fundamental data, which could be utilized for utility tokens and security tokens. And last but not least, you have to automate the processes, because while we humans are very good in critical thinking, and the critical thinking will allow us to determine the key drivers of value for each type, we need to automate the processes, because we are now in a digital age, and in a digital age, well, our brains cannot compete with computers' ability to process tons of information and to do all kinds of computations and calculations. So this is a general framework, obviously, and then you have to, get into the details of each of them. But here I just wanted to give you an overall sense of what it is that you need to do in general to assess crypto assets. I will pass it to Rob now to discuss
Sure.
performance of deposits.
So how have they performed? Yes, this year, and we have an interesting question about what's going to happen if the US dollar has pressure on it as it's being printed at such a terrific rate at the moment, as are other currencies around the world. And that's a big economics question, but I'll talk more about, and we'll talk more about that at the end. But the interesting thing from a performance point of view is that crypto assets have some volatility, and choosing the right ones is important. And this is what SupraFin is all about: is how do you choose which one is a decent crypto asset, a decent in this diversified asset class. Which one would you go for? And if you're a sophisticated hedge fund manager with a huge amount of data and analytics, you could probably figure out quite easily when is the right time to buy, when is the right time to sell, which crypto assets should I switch into. And this is what it's about. And you can see from that graph that there was significant opportunity in that January to March rise, and then a correction when all the markets went into this pandemic phase, when we had no idea what was the future going to be. As things started to stabilize, though, you could see that there's been some recovery in crypto assets and strong growth of the Bitcoin and other types of assets. But you've also got one there called Link, which obviously, if you look at the difference with Bitcoin being at 28%, 29%, and Link at 132, you can see different rates at which crypto assets increase. And this is why it's important that you have some intelligence, and that is what SupraFin can give.
Great.
So what is SupraFin? I'm doing this. I'm a board advisor for SupraFin. Liliana is the CEO and has a team of people building the platform, developing the whole marketing strategy, developing the whole go-to-market and customer service center and so on that will support this, and the back-end geniuses of the quant side, which bring up these expert models that allow for the smart tech and wealth tech platform, the smart wealth tech platform, to deliver intelligence around crypto assets. We're going to have a small video now on this exciting platform. So as you saw from that, it's a very simple message. How do you choose crypto assets? How do you get exposure to things that are normally only the proviso of the most sophisticated hedge fund managers or crypto analysts in banks that are doing this type of work? And that's the whole point of SupraFin, is we're exposing this to have the whole overall aim of financial inclusion and to build out these customized portfolios with monitoring and the safely storing your assets and buying your assets. These are some of the real core functions that will allow for this asset class, cryptocurrencies, if you call it an asset class, becoming more mainstream. We don't have many solutions in the world right now that take it to mainstream, but this is one of them that will allow it to be brought to mainstream with the fantastic platform that is being built at the moment. And I already have an early release on my mobile phone, so I can promise you that it's being built. So what is it doing in terms of the back end of the platform? And SupraFin has these some quant teams that are putting a whole proprietary investment and risk model together. It uses it assesses the relative value and also the risks inherent with hundreds of crypto assets. And we're focusing at the moment with SupraFin on exchange and stable tokens. We will look at utility and others in the future, but those are more complex and really don't have a lot of data. And one of our questions that just come in here is how do you know your data is not garbage, and also ensures full disclosure since they're not regulated yet? Well, that's quite easy to answer really, because we're getting data from the actual blockchain itself, which is public, and that's why we're concentrating on the exchange tokens, stable tokens. They're very public exchanges. If there's any sort of token in a private market, that will not be sent through to SupraFin because it can't be trusted. The data can't be trusted. These are all public blockchains that can be analyzed.
Yes, and just to add there, so if there are exchange tokens that have less information that allows us to properly assess them, then we don't consider them, because it's true, without us having the right data, then we cannot possibly make the right assessment. So, and because there are hundreds of these exchange tokens, then we select the ones that have all reliable data available, and then we choose the ones that we believe fit our criteria for adding value.
Exactly. And that's part of the qualitative analysis that goes in. So it's not just a pure quantitative play. There are factors coming in around the validating, the data that is available through these chains and through public information. And yes, you're right, Yanis, around private exchanges and some of the problems with that. But we have a lot of intelligence around that, and it's well documented by partners and other people I know around that follow the legitimate exchanges, legitimate data that is out there. Namely, one of my other clients, Crypto Compare, ByteTree, friends I have in the network, Cointelligence, and others, Coinmetrics, and others that are used to this data and used to the problems we have with some elements of data coming from private exchanges. So you make an important point. And what else are we doing? Well, there is a desire that we will be leveraging AI and for future predictive investment models. The algorithms, as they say, as I stated right now, are not learning algorithms. They are more predictive and more standard quant algorithms. We do aim though to have more learning systems in the future. We can move on to that. Next one. So as I said, the platform and app is on our mobile phones at the moment, but that's not for public release. We are planning through SupraFin to have an early access release. That's going to go, we hope, to more than 4,000 people. If we get more people to register, we're nearly at that number right now. And if anybody on this call is not part of that registration and wants early access, you can do that easily through going to the website or scanning this QR code, which will take you directly there.